The Simple Path to Wealth by J.L. Collins is a straightforward guide aimed at demystifying investing and achieving financial independence. Originally developed as a series of letters to his daughter, Collins's advice is based on practical, time-tested strategies that focus on simplicity and resilience in personal finance. Core philosophy. Collins emphasizes that true wealth lies in freedom and the ability to make life decisions without being influenced by financial constraints. This freedom comes from understanding and applying simple investment practices that align with long-term financial stability. Key principles: FU money. Financial freedom defined. Collins introduces the concept of FU money, a term for having enough financial resources to make independent life choices. This level of security means that one can leave an unfulfilling job or handle unexpected life changes without anxiety. The peace of mind that comes from financial independence is a key motivator for adopting the strategies outlined in the book. Avoiding debt and building wealth. Debt is a significant barrier to wealth. Collins highlights the importance of avoiding consumer debt and treating debt repayment as a priority for those already burdened by it. He categorizes debt as a wealth killer, advocating for aggressive debt elimination strategies before focusing on investment growth. The power of simplicity in investing. One of the main takeaways from The Simple Path to Wealth is that investing doesn't have to be complicated. Collins champions the use of low-cost index funds, especially the Vanguard Total Stock Market Index Fund, VTX. By investing in index funds, individuals can benefit from the growth of the overall stock market without the need to pick individual stocks or worry about market timing. Understanding market cycles and volatility. Collins reassures readers that market downturns are a natural and inevitable part of investing. Instead of panicking and selling during market corrections, investors should remain calm and use these periods as opportunities to buy more shares at discounted prices. Historical data shows that despite short-term volatility, the stock market trends upward over the long term. The 4% Rule, the path to financial independence. A central concept in Collins's financial independence strategy is the 4% rule, which states that if you withdraw 4% of your investment portfolio annually, it should be sustainable over the long term. This approach assumes that a well-diversified investment portfolio, primarily in stocks and index funds, will continue to grow enough to offset withdrawals and inflation. Detailed investment strategy. Why choose index funds? Collins explains that most people are not equipped to beat the market by picking individual stocks or timing the market. Index funds like VTSAX provide a simple way to invest in the entire market, capturing overall growth with minimal management. Benefits of index funds: low fees, broad diversification, and alignment with long-term market trends. Comparison. Active investing often involves higher fees and carries the risk of underperforming compared to passive index fund investing. The importance of low fees. Collins points out that even small fees can erode investment returns significantly over time. For example, a 1% management fee may sound negligible, but it can cost hundreds of thousands of dollars over several decades. By investing in low-cost index funds, investors can keep more of their returns. Compounding and reinvestment. The book underscores the power of compound interest. Collins explains that by consistently reinvesting dividends and maintaining a long-term investment strategy, small amounts can grow into substantial wealth. He illustrates that even modest, regular contributions can accumulate to a large sum due to the exponential growth effect of compounding. Avoiding financial advisors. Collins advises readers to be cautious of financial advisors who may prioritize their own interests over those of their clients. Many advisors recommend high-fee investments that can reduce overall returns. Self-education and direct investing through platforms like Vanguard are encouraged to minimize costs and avoid conflicts of interest, building the right mindset for investing. Emotional discipline. One of the biggest challenges in investing is managing emotions. Collins highlights that fear and greed are the most common emotions that lead to poor financial decisions, such as selling during market crashes or buying into speculative investments. Staying the course, he encourages readers to ignore market noise and news that may cause panic and to trust in their long-term strategy. Trust in the process, a simple and consistent investment strategy, requires patience. Collins reassures readers that while there may be periods of downturns or stagnation, the overall trend of the stock market has historically been positive. Long-term perspective. The key is to maintain confidence in the process and avoid making emotional decisions based on short-term market movements. The power of living below your means. Saving and investing are only possible if you live below your means. Collins advises readers to save a substantial portion of their income, ideally up to 50%, to accelerate their path to financial independence. Frugality and mindful spending habits are essential for building the initial capital needed for investing. The role of bonds and asset allocation bonds for stability. Collins acknowledges that while stocks should make up the bulk of an investment portfolio, bonds can play a role in reducing risk and providing stability, especially as investors approach retirement. Asset allocation. He suggests adjusting the stock-to-bond ratio based on age and risk tolerance. A common approach is to invest your age in bonds. For example, if you are 40% of your portfolio could be in bonds. International stocks. Collins argues that for most US-based investors, holding a fund like VTSAX that invests in the total US stock market is sufficient, as many US companies have global operations. However, he acknowledges that some investors may prefer additional exposure to international markets. Steps to achieve financial independence. Start early. The earlier you start investing, the more time compound interest has to work its magic. Stay consistent. Make investing a regular habit, regardless of market conditions. Avoid lifestyle inflation. Resist the temptation to increase spending as income grows. Reinvest dividends. Always reinvest dividends to maximize growth. Keep it simple. Stick to the plan. Index fund investing doesn't require frequent adjustments or complex strategies. Final thoughts on wealth and freedom. Focus on what truly matters. Collins emphasizes that while financial independence is important, the ultimate goal is to use that independence to live a fulfilling life. Money is a tool, not the end goal. Legacy and generational wealth. Teaching others, including family members, about these principles can help ensure that future generations are equipped with the knowledge to manage and grow wealth effectively. Conclusion. The Simple Path to Wealth lays out a practical and effective roadmap to achieve financial freedom. By following a simple investment strategy focused on index funds, minimizing fees, and maintaining discipline during market fluctuations, readers can build a strong financial foundation. Collins's emphasis on simplicity, emotional discipline, and long-term thinking makes this book a valuable resource for anyone looking to secure their financial future.